Dinesh, even though this week there were a lot of global rumbling, the good bit for Indian markets was the large pharma deal. It's exciting to know that Piramal has got a valuation of $2 billion plus only for the domestic formulation business. Is this a indication of a bubble formation, or this is the genuine value these pharma companies can demand now?
I would say that they have got a very good valuation. EV to sales of around 7 times is definitely a valuation which we were not expecting. So that way I would not say it's a bubble formation, but maybe valuations are really rich at this levels. But having said this, I think that pharma is an industry where one has to take a very long-term view. So a company like acquired will always have long-term one generic business, and India has a leadership position in that. So I feel like in that terms, if you take a long-term perspective, maybe it will make sense. But short-term, when we look at short-term, they have got a very good valuation.
Would you buy pharma stocks with the assumption that the global top three MNC companies have not picked up an asset in India, which is Glaxo, Pfizer or Sanofi? It's really the smaller players or the A- players which have picked up large assets in India. It's if it is Hospira or Daiichi or Abbott now.
See, it would be very like a speculative call to take that, okay, now again this bigger player will come and buy at a higher valuation. So that is always a risky game, and it always takes years to crystallize this kind of a deal. It is better we go as per whatever valuations are justified, and pick our stocks based on fundamentals and their growth in earning, rather than speculating that some big player will come and take away, say, players over here and give a valuation what Piramal got. So I am not of a view that one should really take a speculative call on the segment.
You split the investing part for us very smartly. Have a portion in large cap, have a portion in financials, and have a portion in software. But the remaining 30%, according to you, should be in mid caps. So let's look at mid caps now.
Right. See, as you rightly told, that investors should have a strong eye on large cap, and his allocation towards, if at all is a bit conservative, it must be 80% toward large cap. If he is aggressive also, I think his allocation should not be more than 30% in mid cap. In mid cap, we like few stories like electro steel casting. We like metal because we feel that India has an say a unique position when it comes to metal. Our plants are well integrated, and if you look at electrocast, valuations are really appealing. And electrocast, see, in few years back they had gone for a mining license and they got a permission. Now in their subsidiary they are planning to have this backward integration of their pipe division.
They'll list the subsidiary.
They will list the subsidiary. That will create an unlocking of their assets. So we like the story. Because of this we feel it's a multi-bagger. Second story that we like,
what's
is
the price target for electricity?
Again, price target would be like 50% in 2 years. So these stories are which can give you an appreciation of around 40 to 50% in next 2 years, and margin of safety is high in this, because these are the news which are not very deeply analyzed across all analysts, and there is always say a good potential of appreciation when news are crystallized and announced.
What else do you like outside the electricity?
Second story we like is of SpiceJet.
Aviation stuff.
Aviation story. I know that you would be surprised hearing that we are actually picking a stock from aviation. We feel that worst is over for aviation because they had built huge capacities, and in last few quarters we feel that they have reached an optimal level of usage of this capacity, and giving their debt positions, I would not I don't foresee any kind of an capacity expansion in this segment. And if you look at SpiceJet, even in last quarter or last 9 months, they were making portfolio, their companies every quarter.
Okay. Last time on this forum, you give us a big prediction. 30 seconds to give us your big prediction now.
Okay. As I told you that I am seeing lots of liquidity coming in this market in next couple of years. So if you are talking about 3 years, I am seeing a strong fundamental growth. I am seeing this corporate earning to grow at the rate of around 20-25%. So keeping that all this parameter in mind, I feel that we will see index after 3 years in the region of around 27,000 or roughly 26,000 to 28,000.
28,000. Good to have you on ET now, Dinesh.
Thank you.
Thank you for joining us. Now, before I wrap, I'll just like to revisit some stock ideas Dinesh has identified for us on this edition of Markets Mantra. They're there on his screen. 3 large cap names and 3 mid cap names. Thanks for watching this edition of Markets Mantra. I hope you enjoyed the show. Have a great weekend.